Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your agriculture update for this Wednesday, and this is the 1st of August, 2018. Well, now the threats are coming back onto China about increasing the tariff amount on the $200 billion worth of goods. That happened late this afternoon, about 3:30 p.m. Central Time. They're going to take the comment period from August 30th and extend it to September 5th. He's asking Mr. Lighthizer to consider raising the tariff from 10% to 25%. That's a done deal. Now the question is, how does China respond? And if they're into face saving, it won't be good. So we'll see if the markets are able to react to it. The stock market today down. This was the action, obviously, of Apple, which is approaching being the first trillion-dollar company. But soybeans down 17 cents on the news. Gold was actually close to the low of the day at the very last trades of the day, but remember, it closes at 12:30. But all of these markets in the metals got hit off this news. Now, as we take a look at soybeans, it was interesting today. If you looked, I think it was Bunge, took a huge loss. They had bet that, from what I'm hearing, one of the bets, and they make many, but one of the bets was that the tariffs were going to be short-lived and that the soybeans would go up, and instead they fell down and they lost a substantial amount. The good news that they said is that they've done their crush margin hedges, and I'm going to come back to crush margins in a moment here when I show you something new that we're putting on our mobile phones right now. But in looking at this, you're out of a trend. The market is up for the week 16 cents. It's no longer a pattern of lower highs, lower lows. Is it bullish? No. The market still has a lot of resistance up to that level. Can it get there if we get nastier with China? That'll be the big question. Bunge happens to think we've lost the Chinese business for this year. As you can see, the market's come up. Now it's starting to slip back. Should the market starts coming down, be a saucer, and that could be a very bad formation. You got to think of this as a saucer, and then the lip starts coming down on you again. Many chart formations. I don't pay attention myself to chart formations for trading. I know a lot of people do. I like these parts. I like using swing lines, understanding if you're making higher highs, higher lows. If you watch any of the financial stations, they bring up charts. You'll hear that comment all the time. Then you'll start hearing about moving averages. Moving averages are not a price predictor. What they do is they help you to filter other parts of your technical analysis, and they can offer support resistance points on a chart as well. I use it in both ways. When a market is over the 18-day average, I say the market has a bullish bias. If the swing line is up, that means the trend is up. I look to see where the Bollinger Bands are, which are an algorithm designed to keep markets trading within them 95% of the time. Now, yesterday, one of the things that happened is the market rose rather dramatically off the news that maybe, just maybe, something good was happening in Chinese talks. I think that was offset today in a big way, and you can see how the market felt about that, pulled back under that Bollinger Band. But the trend of the market is still basically up, but overbought. In order to change all this, you've got to get these Bollinger Band numbers, both of them over 80. They're not there, and they'd have to be there for several days running. I don't see that right now. So I'd say that you have an uptrend that has hit some upside targets, overbought, maybe it stalls there. The same thing in the meal market. Hit the upside targets, ran to them, couldn't keep the pressure on the market to break out of the Bollinger Bands. It's generally from this sideways action, be it in this market and the soybeans, that new trends develop. Now, they can be up or down, but it's like being in a pipe with pressure, and as it breaks out of itself, you get all that pressure from the sideways action that creates a move. In the soybean oil, this is a function of the crush spread, and I don't think the oil has a lot of value one way or the other right now. I think it's being driven by what goes on in the soybeans and the like, but like the others, it went up, did not make it to the upper Bollinger Band, is overbought, supports back at 28.69. If it takes out 28.53, it ends this swing up it's had. In the corn market, corn's pulled back 7 cents. That's rather large. But when I look at what's going on here, you'll see both numbers today, let me take that back here, are over 80. Both numbers were over 80 on Tuesday, and both were over 80 on Monday. That means off this break, does the red line tonight slip under 80 or stay above it? If it stays above it with the embedded reading, it survives its first test. I would expect to see buying on the breaks here, and I think what guides the market is not if you take out 373.5 or not, but rather can you keep the embedded reading alive. In the wheat market, if we take a look, both numbers today over 80. Both were over 80 yesterday, both the day before. So like the corn market, I would expect to see buyers show up on breaks. You can see that you're getting to the point now where the 18-day average just slightly, but it did it. You got a bullish crossover. So I would think that that adds to the bullishness of this market. In the sugar market, you're trying to develop bearish embedded readings again. If you'll notice today, both numbers are under 20. Both under 20 yesterday, not the day before. Very important what happens tomorrow. Even if the market gets over the lower Bollinger Band, it can still embed. So this is still a very bearish chart that could convert from being oversold to embedding. I would expect on rallies you see rather aggressive selling. In the coffee market, you have a pattern of a higher high and a lower low, no trend. The bias is down because you're under the 18-day average, and momentum is still pointing down, but in oversold territory. I would look for support against the lower Bollinger Band. In the cocoa market, this is called running the Bollinger Band. It's a very bearish chart formation. What you don't know is when you get these reactions how high they'll go, but this market just let go on the downside today, 100 points lower. They're just what I'll call burying the market. The strong dollar, maybe the crop conditions have improved. I had mentioned about a week ago that some of the reports in this rally where crops conditions were not good. Well, I think the market has absorbed all that. This morning, if you were a subscriber on my service in the morning, I was talking that it certainly looked to me like the cotton was going to run into all the resistance it needed today against that upper Bollinger Band. That was 90.05. You hit 89.98. That's close enough for me. And you had an outside day down. You lost the ability to embed. This market, I think, could fall more than people think, maybe get back to that 18-day average, which is about another 100 points lower, 80 points lower. In the cattle market, while the swing line is down with the lower highs, lower lows, by closing and staying over the 18-day average of closes, you're not allowing this market to grab traction on that. And the key is if you can get through, I guess, 108.80, this last break low yesterday, then you can put the 100-day average potentially into the eyesights of the bears. But right now, I think nobody's in control of this. I don't think there's a trend per se. By hitting the lower Bollinger Band yesterday, you hit the price objective. Next resistance here is 152, let's call it 75. If you get over 153.25, you do two things. Number one, we already know we've hit an objective. Momentum's gone flat on you, and that would negate the downtrend if you got over that. So expect the bears to show up at the 152.75 level and fight that battle. In the hog market, you didn't quite get to that lower Bollinger Band, and you have an outside day up. Now, fighting this is the factor that if we take a look, you've got both numbers under 20, both under 20 yesterday, both under 20 the day before and the day before. You have an embedded reading. So even with the outside day up, this indicator, in my opinion, controls the market. Normally, I'd say you're trying to change the trend because you no longer have the pattern of lower highs, lower lows. I'm not making that statement. I'm saying this rules the day, and therefore I think the bears are still very much alive and very much in control of that market until that sector changes. Now, I want to explain to you our newest Market Center streaming quotes. If you take a look at this, you can see the new look we have. You see the high-low. You see the current price. We showed the amount traded at the last time that it traded, just to give you an example, times. And remember, this isn't live, obviously. I captured a picture screen of it. But you create your own custom quote page with it. You can also tap a symbol easily to get to what? Charts and you can put the indicators that you want on these charts. You can place orders right off of it if you have a trading account with us. You're going to be able to also create price alerts, so you can go in and set your market, and on your phone will come up a message that a price has been hit. This is all brand new things that we've done. Then voice control. You can say things like, give me a corn quote, wheat chart, show me something else. You can go on and on with all that, so you can able to do it. And when you say that, for example, show me the weather chart comes up. Listen to this.
Current prices, E-mini S&P 500 September.
What you're hearing there are the quotes. You can tell it to play my quote page. Imagine driving and you're just listening. You don't have to listen. You don't have to look at your screen. You can be anywhere. It's a fabulous feature. So we're incorporating all these voice commands, if you will, into that. Pretty interesting, huh? Now, you crush quotes. Remember what I was just saying for you grain traders? Here they are, live. So you can set them up in your phone. It'll tell you what they are. It'll talk to you if you set it up to do that as well. Then you're able to get our QT messages, and of course you can see my videos, the one like you're seeing right now in it. You can view quotes by category and change the look at any time that you want, and stay up to date with our QT news. These are new news stories, another way of looking at them as well. Downloads are available from this on both your iOS and Android. You're going to need a username and a password in order for it to work after you do the download. Either call us, go to our website at www.iraepstein.com, sign up for our Market Center products. You can click up here and away you go. Voice activation, something very brand new from us. I'm Ira Epstein. Have a good day.